Okay. All right. Hey, welcome everybody for another weekly recap. This is Trader Travis. My partner in profit, Peter, is with me again. Two average regular people. We're not gurus coming down from the mountaintop telling you we're the world's smartest trader and the world's most profitable trader. If you've seen the same YouTube ads I have. But anyway, we're just showing you how two average people can trade the market and do what the experts say we can't do, and that is beat the market consistently each year, even in down years like 2018. But as usual, everything we say is for education and informational purposes only. We believe in empowering you with the education and knowledge, not like always needing us to tell you what to do. If you always need someone else to tell you what to do, then you are what are you, handicapped, a victim? What is it? A dependent. You're dependent on
Dependent,
somebody.
yeah.
Yeah, and we don't want that. All right. So with that being said, what I'm going to do is show you my screen here. I'm going to go first this week. I'm going to show you what I'm going to do is cover the general market. I am a cynic today. I'm a hardcore cynic today in all kinds of areas. I got a text from somebody today, one of our, anyway, I won't say it just in case she watches this video, but it was somebody we do business with, and it was like, oh, let's schedule an appointment. I was like, oh, so you can sell me more stuff, right? So anyway, so let me come here to and I'm a cynic with the stock market because stock market is up today, up 1%. Can you see my screen, Peter?
Yeah.
All right. So stock market is up 1%. It's been actually gapped up, jumped up in price. All right. So what I had to do is real quick, do a quick edit. Sorry, but I had to get rid of moving averages because it was making it harder for you to see. What I wanted to show you is that the stock market has gapped up the last couple of days, right? So let's highlight this so we can see this price movement has just jumped up. So you might be getting excited, right? And this plays on your emotions. And CNBC is like, oh, the trade talks and all this other stuff. The market is going up. Don't believe the hype is what I sent out on the email. Because you know what? That's why I'm a cynic. Because I'm like, yeah, somebody was like, hey, the market's up, Travis. I was like, so I don't care. And I was like, I'm sorry, I'm a cynic today because I'm a little bit bitter because I'm like, they've been playing with my emotions the last, what, 3 or 4 months, right? I got excited just like everybody else the last few months when it hit the top of this price point, this price area, this channel, and then it just fell. And I was like, oh, and I watched my trades start losing money, my bullish trades, trades that make money when the market goes up, right? And I've been waiting for them to hit profit, but I've been waiting and waiting and waiting. Why? Because the market, for at least since about May of this year, has been trading in this range that we call a channel. So that's why I'm a cynic today because it's at the top of that price range or the channel, also called resistance. So I don't I don't trust it. I'm sorry. I just don't trust it. I'm kind of 50-50 because I don't want to get excited thinking the market's finally going to start hitting new highs again. And then next week we get some news headline that somebody backed out of some kind of trade deal and whatever they come up with. They always come up with some kind of bogus reason that they don't know. It's just noise, right? And then the market's going to fall again. That on top of the fact that it's October, right? If you know anything about stock market history, a lot of bad stuff happens in October, right? So that's historically on people's minds. I mean, you can go back to market crashes, Black Monday, all these different events have happened in October, right? So that alone is a very scary month for the market. So I'm cynical because of the past history of the market and because of the current channel that it's in. So with that being said, I'm trading what I see, not what I think I'm going to see. I have to have an opinion, have a bias, but not allow it to affect my judgment. So trading what I see, I'm going to do one of two things, depending on what template you use. A freestyle template, I could trade this channel and I could say, you know what, I think this channel is going to hold and I'm going to place a bearish trade, meaning that when it falls, I'll make money. So that's one way I could play this market. Second way is I could just sit in cash and just say, you know what, let me wait it out and just see how the channel plays out. And if it kind of breaks out of this channel, then most likely the market will head higher. Or I could sit in cash because it's October. I'm like, yeah, I don't like trading in October. It's just an ugly month. So that's the second way I could play this. The third way is if you use Market Club. Let's pull up Market Club. We see that the Dow and the Nasdaq have triggered green weeklies again. So they're all saying, hey, the market's going to go up from here. We're still waiting for the S&P. I anticipate that's going to trigger here shortly, just because the other two have, and they generally trade neck and neck. So what I'm going to do though is show one of the, it's not really a downfall, it's something to be mindful of. Market Club does tell you this in their help menu, and you'd be surprised how many people don't read the help menu. They say that the trade triangles will be produced all the time, regardless of the trend, but it's best to use them when the trend is strong, meaning that this channel, look how many green weeklies we had, right? Let me take them off again. Let's add them back on. We've already had a green weekly back in December, but then we had a red weekly. Now we got another green weekly. That is very consistent with channel, or when the market is trading in a channel or trading sideways, you will still get the trade triangles produced, and that's what the help menu says. You still get it produced, but it's best when the market has a strong trend. So let's take off the weeklies. When the market has a strong trend, either up or down, that's when the trade triangles work best. It's like a swing trading built system. But don't get all ticked off with them. You're like, well, I can't, they said a green and then red. Well, that's because the market is in a channel. They're just actually showing you what the market is doing. And the market can't make up his mind which way it wants to go. So people get so seduced by the trade triangles, they forget to step out and look at the bigger picture. The trade triangles reflect what you see here. Market going down from up to down, right? Then we put back, and actually you can see it on the chart, but sometimes the trade triangles, what do you see? The top of the channel, market went down, close to the bottom of the channel, it went up, top of the channel, market went down, now it's going up again. So you see the same thing. So all of that is to say that, hey, if you want to use Market Club, you could say, hey, it has a green weekly, is all three greens plus 100, I'm going to place a bullish trade. You would not be wrong to do that. But the more prudent thing to do is take a step back, take the trade triangles off, and look at the naked chart and say, what is the chart telling me? The chart is telling me that even with this green trade triangle, it's not going anywhere. So you would not, ever repeat, you would not be wrong to trade a bullish trade on DIA per the Market Club little system we use. But the more prudent thing to do is to pay attention to what prices are actually doing. And so that is either you risk less money because the market has been in a channel lately, or you wait a bit to see if it finally breaks out of this price area that it's stuck in. So those are the two things I would do if you were trading that way. So some people get so excited, they just risk too much. And then like Peter, he got caught in on the wrong side of a trade recently. He got upset. It's like, yeah, I don't want that to happen to you. I don't want you to get up, place a bullish trade, and then the channel plays out next week and starts falling. You're losing money thinking you did something wrong. So no, you don't necessarily do something wrong, but we have to be prudent and have to take the bigger picture. So I'm looking at my notes here. That's all I had today. I just want to show you the market analysis, let you know, hey, I'm a cynic. I don't buy into it. I hope it goes up because I'll make more money, but if it didn't, oh well. What I will do is play some trades. I'm trading what I see. I'll play some trades, but I will risk profit I just made. I talked about that last week. I think I might have talked about it in the last recap. Oh yeah, I did talk about it. Yeah. I said I was going to play some out of the money spreads below this price level. They actually just closed today. Let's see if I can show you here. So they just closed today, and like 7 o'clock in the morning when I was still asleep, right? Because thanks to Peter, now I automated more of my trading. I put in automated orders to buy, well, to sell at certain prices, and I don't have to show up. I don't know why it took me so long to start doing that, because I would just wait and show up at the computer. Oh, is this trade at a profit? Let me close it. But now I'm like, no, I set my profit targets. I put in an automated order, tell my broker, hey, when it hits this price, sell it. And it's so awesome logging in every day. I'm like, hey, I just made some more money. And I didn't have to be at the computer, right? It's so passive. So anyway, thanks to Peter, these 3 trades right here, or at least these 2 trades right here were profitable. So I'm going to play some more trades, trading what I see, and I'm going to risk that profit. So that's how I'm being prudent. I don't trust this market. I don't trust the signals I see, but that's me, right? I still have to trade what I see. So I'm going to do that, but how I'm going to be prudent is I'm only going to risk profit I just made. So that way, if the next trade doesn't work out, I'm just back to break even, right? I didn't really lose anything. So that's all I have. And so let me go ahead and turn the floor over to the master, Mr. Peter.
Yeah, master. Hey, the other thing I did want to point out, when you guys, if you look at the S&P, or anything, whenever you're looking at the stock too, when it makes like it's a big move up, right? So if I look at SPY, and I'll go back to Walmart because that's the one I'm in. Sorry, I got to move a screen here. So if you look at SPY, I got a lot of stuff going on, but look at the volume. So today's a big up day, right? It's like up what? It's up 1.1%. And I'm sure if you turn on the news, they're like, oh, this, that, and the other thing is great. Well, that's not a lot of volume. That volume's pretty low. So that doesn't tell me there's a lot of big money behind the move. That's something Travis always talks about as well is, is there a lot of money behind the move, or is it just a few traders out there? And that's what it looks like to me. So that's the other reason I wouldn't trust that. The market's going to continue going up. But as we always say, it doesn't matter what we think. You just do what it is showing you. Right now, it is showing you it's going up, but you definitely have to use some caution. Overall, the market's gone up.
Yeah,
what's interesting, and I'll kind of cover this real quick. I think people would find this fairly interesting. When I was looking at, so what was September of 2018? Yeah, so if we look, I used a kind of a 2-year in my study. So right here, it's up here, right?
It's close to right before the correction.
Right here, right? So this is September of 2018. So that's a year out, right?
Right before the 20% correction.
So if you're a buy and hold investor, in 1 year you made nothing on the SPY because
it had a lot of stress.
1 year ago it was at 299.47.
Yeah, and you had, look at how much stress you had. The 20% correction.
Down.
What is and then this year, you had a correction in May. Oh, I know, because Travis took vacation. That's why you had a correction.
That's right.
And then you have this September, it started falling, and now it's been in a channel. So yeah, you have a lot of frustration, which is one of the downfalls of bond hold, which is why we're advocates of options. They give you more control. And I'm talking too much. Is Peter? Go, Peter. You have the floor. Sorry.
No, that's okay. Okay, so I'm just going to cover the last trade I'm in is Walmart. Today is looking like a second down day. Yesterday was kind of a down day. This trade is expiring on Friday. So I use the Market Club template to look at this trade. And right now, Market Club's still showing green across the board. There's no issues with it. But because I'm nearing my expiration, and October has not been a good month for me, I'm waiting until, what time? It's 2:30 now. So I'm going to wait until about 3:30-ish and look at where it's at and close this trade out. Because when it opened this morning, I was at a 75% profit. And now last I looked, I was at like a 63% profit. So I'm profitable. So I'm going to go ahead and close it out. And actually, I'm not going to go into detail, but I'll probably roll that one out. So for some of you, some of our members that have been doing this a while, they know what I'm talking about. But bottom line is, normally I would exit this on an exit signal. I haven't gotten an exit signal, but because it's flirting, it's technically in the money. It's making money, but it's technically in the money because I sold the 120 put on it and bought the 115 put in my spread. So technically it's in the money. So we won't even play around with it when it's this close to expiration. So we'll just go ahead and take our profit and move on. I brought back, by popular demand of Travis, here's my weekly chart. And this is all I was going to just kind of show you. You can see when I was doing all this, you can see I had some months where I didn't do much. I think we were on vacation there in July. June was a good month. You can see, May was my fantastic month, and you can see the difference in trading though. I kind of June, we start getting into the summer months and I got lazy. So July, I think I was on vacation the whole month of July. I made $19. August was a decent month, right? I was right at my 2%. So that's pretty good. September was okay, not losing, but nothing spectacular, 0.5%, but not too bad, right? And then October was really, really good until this guy here. Even when I get rid of this guy, it's not a fantastic month. But actually, if I get rid of these two here, These are my two really just kind of mistakes that I made. And you can see I wouldn't have had a bad October month, but I do have a bad October month right now. Right now, this was where my Walmart trade was at. So if we take that out, I'm at about a $1,400 loss for the month, which hurts, right? I mean, that sucks. I mean, it just kind of wiped out one of those, most of August. It kind of wiped out half of August or 3/4 of August. So that kind of sucks. So, but it is what it is. It's the nature of the beast. It's the nature of trading in October. I always tell myself go easy in October, and I never listen to myself because I don't. So October was a crappy month. I know it's not over, but for trading purposes, for the most part, it is for me. I won't place any trades within the month of October. If I place any trades in October, they'll be for December or farther out. But and then the only other thing I did place, I own AT&T. I own it at such a low cost basis, and with AT&T going up, I was able to get some really good premium on some covered calls that I can really set it and forget it. I bought AT&T at 33. I sold a $38 covered call. So even if I got called away, that takes care of the dividend and some, because on 500 shares, the dividend's only like 240, I think. So I've more than made up for the dividend, even if I get called away. So, and then I can go ahead and get back into AT&T using my Buffett strategy. So that's pretty much where I'm at. It's kind of a slow, this next few weeks will be slow. I won't have a ton to cover because I'm not doing a ton of trading. October has not been a good month for me. So for me, when I get frustrated and upset, I just find it easier to kind of scale back. Don't place any really stressful trades. That covered call is not a stressful trade. Even if I were to roll my Walmart trade out, it will not be stressful because I'll just use my profit, like Travis said, to roll it out. And so even if it comes up a loser, I haven't lost any money. So that's it.
All right. So can I have a couple of questions in one point? So if I'm understanding your Excel, you don't have anything really for November, December other than that cover call. So you don't have any income set up for the next 2 months, right?
Yeah, I will eventually. I just haven't done any income trades for those months. No. So I may. I haven't. I have to go into putting together a trade plan. So yes, I have not put together a trade plan for the upcoming quarter.
Okay, which is fine. Nothing wrong with that. So the translation there is something Peter says. You put your, because I always, to guard myself against cynics and critics, sometimes I'll be like, oh, I was lucky. I got 300% return on investment. Peter hates when I say that. So he's like, no, it's not luck. You put yourself in a position to benefit. So Peter has not put himself in a position to make money for the next 2 months. That is not wrong, because the next 2 months could be ugly, especially if we have a correction. But if the next 2 months are great, that's the flip side of that. So you have those two. It's like, yeah, I'm not in a position to lose a lot, but I'm also not in a position to make a lot if the market goes up. So we always want to look at it the way it is, you know.
It is okay. What it is. My 2020 trading will be more, I'll be a better trader. I was a very lazy trader. I've talked about this before. I was a very lazy trader this year. I just didn't trade as well.
Okay. That's okay. It happens. It happens, buddy.
I was so mad because I just had told another member, hey, try to keep your, risks and your profits comparable. And I did the exact opposite of what I told him to do.
Yeah, that helped me though, because I didn't realize that these are the trades from all your accounts. So you lump them in to see how you're doing overall. So that's good.
That's why I did this weekly spreadsheet. And then going forward now, though, so it's just, I found my kind of my rhythm to be able to, okay, so once I focus in on a trade, so let's just use Walmart again. So let's say I'm going to trade another bearish or bullish Walmart income strategy. I now have a little spreadsheet that gives me my risks for each of my accounts. So I can punch in the numbers and it'll tell me the contracts for each of the different accounts. And then I can go into my trade platform and it's just like what you showed me. I can place all in
Yeah.
the different accounts, the different strikes for the same stock.
Yep.
And then we'll start to see, I guarantee, Travis, you're going to start to see this kind of month come back again. This is where I did it the best when you go through this. I'm trading the right spreads. I'm trading multiples too. That's the other thing. I'm doing multiples in the right price points, and I'm doing them across different accounts, all the same trade, right?
Yeah.
So it's technically not as, I'm finding my rhythm. It's not as difficult to manage, you know.
Okay. And on that, you know what? Let me go ahead and show them that real quick. Let me just look at real quick my Excel. I'll show them what I showed you because I'm like, it may be beneficial for other people if they don't know that. So
Oh yeah,
November.
you have that formula thing up there, right?
No, I don't. No, I it's in my head, and I'll show you why. Can I take back control of the
Yeah, go
screen?
ahead. Yep.
I don't have the Excel only because I've kept my this just worked out this way. I don't have the Excel to figure out how many contracts I can sell in each account because my account sizes are perfectly balanced. Like one account is 50,000, one is 100,000. So if I place 2 contracts in one account, I just double it in another one. I don't need the Excel. But that doesn't always work out that way. If you have like one account with 20,000, then yeah, you need the Excel.
Right.
So let me show everybody what I was talking about. What I showed Peter a long time ago, because I was like, why don't you just do this? I don't know how I discovered this, but SPY, I won't do this on SPY, but let's just say we were selling a credit spread on SPY. You can actually sell the same trade in like 3 or 4 different accounts if you have TD Ameritrade and you have your accounts linked. Of course, of course, my very ancient desktop. No, you guys can't see it, but you can't. To my left is a brand new computer I just bought. Because this one I have right now is literally on its last leg. It locks up on me every day, and I spend like 15 minutes waiting for it to unlock, and it's completely frustrating. So I was like, all right. I was like, I didn't tell Peter because I was like, I don't want to hear the noise of like, oh, you need a new Mac. So anyway, all right, finally it just unlocked. All right, so let's just do this. I'm just gonna pick any trade right here. I want to hit. Oh my gosh, I'll just edit out all this locking up that you all can't tell. So let's do six contracts because I have my accounts linked. When I hit confirm and send, I don't know if anybody's ever noticed. Oh my gosh, seriously, hurry up. All right, right here, this little toggle says single account. What I do is change it to multiple accounts. Then it pulls up every linked account I have. And just by default, it just splits to 6 contracts between both accounts, but I don't want that. I know this account is 50,000, so I'm going to do 2 contracts in this account. And as I just told Peter, my other account is bigger. It's double that. So I know I can sell double the amount of contracts. So now I've split off 6 contracts between both accounts. It's the exact same trade I'm duplicating across accounts. I can place it at one time versus what we used to do is place 2 in this account, then log into the other one and place 4 more. It just takes too much time. So now I can just same trade across all of my accounts. So if I have 4 different accounts, I can just do it all at once. Were you about to say something, Peter?
Nope, that's how I do it. And the only reason I use the Excel is because I don't have numbers like you.
Yeah, it's different dollar amounts and stuff.
So once I punch it into my Excel, it kicks out my numbers. I then do exactly what you're doing. I just say, okay, yep. You guys, I don't know if you noticed on my thing, I don't know if it showed, I have one account named AMO13, Smooth Sailing, Home Life, and then I just go down them and punch in all the different ones. And I double check them because I actually screwed this up one time on my really small account. I placed 20 contracts, and on my very large account, I placed 2. And I was like, holy cow, thank God it worked out. It ended up, I made a boatload of money, but I was risking like 50% of my account.
Oh, wow.
Yeah, it was like, oh, if I had lost money, it would have really been horrible.
Yep. All right. So last thing I'll say, and we'll wrap up, is something Peter talked about. Even if y'all didn't pick up on it, we'll tell you. He said and this is what I'm going to do too. He said the next few trades he's going to make, they're going to be for 2020. So he's setting up his income now for next year. And he won't place that many trades for October or November, December. And honestly, I'd be in agreement with that because, as I said on the last Success Academy live call, the year is pretty much over, right? I wouldn't try to. A lot of newer traders have this issue. If they didn't show up the whole year, they try to make all of their income in the last 2 months of the year. Like, I got a 10, 20% return on my account. I'm at a loss for the year. Be at peace with that, right? Because December, everybody, including me, I take the month off, right? Most institutional investors take the month off. They probably set their stuff on automatic trading and automatic buying or selling, whatever. But we won't do it now. But I want you to do this for your homework. Go back and look at December for the last 5 years and see if the volume dies down. The market still opens, it still moves. It looks like there's activity going on, but it's not people. They're out on vacation. And so the volume dies down in December, which means don't expect the market to do a lot of crazy things unless it did last year in 2018 where it was selling off, right? That was very rare. You usually don't get that in December. As a matter of fact, let's look at that. Let's see if the volume dried up in December 2018, because I doubt it when the market was dropping like a rock. All right, so that's this right here from, let's see, end of September to December. Did the volume dry up? Nope, the volume picked up because we had a sell-off in December, which is very rare. You don't get that. Usually you get people taking off. And even still, I don't think this was people actually showing up to work. I think it's, people, they have automated stop losses, like, okay, sell if the stock drops to this. So I think it was the software kicking in, and then it just triggered other people's stops, and it just triggered a sell-off. This is like a cascading domino kind of effect. But generally in December, you don't get this kind of activity. So don't expect it this December. But pretty much you only have 2 months left in a year anyway. So just trade conservatively for the rest of the year. At least for me, I'm doing like Peter. I'm not focused anymore on my yearly profit as much. I'm focused more on the future. Let me set up trades for 2020 to put myself in a position to make money next year. So with that, I don't have anything else, Peter, unless you have a final takeaway for everybody.
I don't. The one thing I was going to say, because I know a lot of people look at this and they look at trying to make monthly income. And I said this to Travis, and it's a good thing you can do. So if you want to trade less often and still earn monthly income, all you have to do, if you have your account, so let's say you place a trade that's good for 6 months, and that trade makes you, I'm just going to use a number of $3,000, right? Then just divide it by 6, and every month pull out $500 from your account to put in your checking or savings account, and there's your income. And that will kind of get you in the feel of, okay, this is what I need to do to generate $500 a month, let's say it is. And once you start getting in the habit of doing that, you will start to see that you'll trade in the future dollars to spend in the future dollars. So in other words, you won't get into debt. You'll basically live your life based on how you traded last year. But you'll see a monthly income, so it won't seem like, well, I'm not really doing that well. And the reality of it is, if you have a $10,000 account and you made $3,000 this year, that's really, really, really good.
Yeah,
that's very, very good. Yeah, exactly. So, but people don't always see it that way, right? They see it as, well, you can't live on $150 a month. And it's like, you can if you do things correctly, and you can live on, you can set yourself up that way. So, yep, that was it. That's all. And I rambled enough, so that's it.
And on that note, let me ramble some more. Send me the 150. If you're like, you can't live on, send it to me. Two, it's what my mentor said. People get offended by this, but he said poor middle class people think in days or weeks. Wealthy people thinks in years. People think I can't live off 150 a month, but I'm in the process of showing a 5-year retirement plan, showing people how to take a 10 grand account to 100 grand in 5 years. I've more than quadrupled that account in 2 years. So the same people who say you can't live on 150 a month are the same people who would never quadruple their account in 2 years, because they're too short-minded thinking. They're too focused on the here and now. They don't know how to think years ahead and say, okay, if I keep compounding this system, that 150 will go to 500, then to 1,000, and eventually 5,000 a month. But you'll never get there unless you're willing to think more long-term. So yes, in the beginning, when I started at 10 grand, my returns were pitiful. I'm like Peter, they were like 150. But here we are 2 short years later, that now $10,000 account is 58,000, I think. and producing way more income than 150 a month. But I'm not taking it out, I'm compounding it. Because if I take it out too soon, I'll never get to the 100 grand. So I have to be patient for 5 years. Then when I get to the 100 grand, I can like, wow, okay, now I can pull out money, $2,000 to $5,000 a month because I've committed, I put in the work, and I let my profits compound. So always remember that 150 is powerful, and it can turn into 5,000 if you're willing to commit to a long-term journey. So with that, bid you all farewell, and we will see you on next week's recap. I think we're meeting next week, but if we're not, hey,
Yeah,
we'll see you in the next recap. All right, y'all take care. Bye-bye.